All right, hello and welcome to Camel Finance. I'm your boy Camel and welcome to Friday. Today, I want to be taking us on a little bit of a detour, right? I'm going to use this guy, Nigel and I want to talk about him for a little bit. Now, I need to preface this by just making everything clear. I have no political stance. I'm completely apolitical. I think the whole thing is just a Roman circus designed to distract you away from everything that's important in life. The more we bicker with each other about which side to take, the more we subscribe to picking a left or a right or an up or a down or an inside or an out, the less focus and energy we're going to be putting in to the things that are important, like understanding how the world really works, like exiting the system, like capitalizing on this opportunity, this once in a generation opportunity to truly take part in a wealth transfer and stand a chance at being financially self-sovereign during what is likely going to come and unfold over the next couple of years as we move towards a far more potentially tyrannical situation with CBDCs and all of that stuff. So I have no political stance. I have no strong opinion of this guy, but I can use this as an opportunity to just point at a few things and say, where have I seen this before? This is how the game is played. And I'm just going to try and show you that now. So first of all, the big news at the moment is that this guy, Nigel Farage, was frozen from his bank account, okay? Allegedly, they've been closed without explanation. I've seen in some places it was due to some strong opinions he had on some arguments that went against the mainstream narrative. But ultimately, whilst this is a bad thing, okay, whilst the ability of a bank to just close your account without explanation, and they can do that. Remember the 3 rules of banking, okay? It's not your money, the money is not really there, and it's not real money. So whilst this is concerning for everyone, it has, however, always been concerning for everyone. This is not a new thing. A bank, without explanation, can just decide to take your money, and there's nothing you can do about it. This is one of the biggest problems with banking. For most people, it doesn't really affect us, right? Because unless you give the bank a reason to, unless you upset the government, then they're probably not going to do it. But they have always had the ability to do this. When you open an account, you sign a bunch of terms and conditions that you almost certainly don't read. And in amongst there, you agree that the money isn't yours. It's just an IOU, and you're actually loaning your money to the bank, and they're free to do whatever they want with it. They're also free to close your account. Whilst insurance policies exist that allegedly can get your money back and probably will be able to get your money back, assuming you're not involved in any criminal activity, the facts are the facts. And the facts are that the banks carry huge counterparty risk. It's also important to point out that when it happens to somebody like this, a famous politician, and he's also an ex-hedge fund guy as well, so we need to keep that in the back of our minds for what I'm about to show you. But when it happens to someone like this, it obviously gets plastered all over the news. But I know for a fact this happens to your average everyday working person all the time as well. Banks just decide to close your account because they think you've deposited money in the wrong place. They can, without explanation really, they can and they will and they do freeze people's bank accounts. This is one of the main reasons I've never trusted banks. One of the main reasons I'm so heavily focused on Bitcoin, physical gold, physical silver on this channel. Remember, if you can't hold it in your hand, then you don't really own it. So anyway, getting back to this whole Nigel Farage thing, he has had his bank account frozen. He spent the entire time since then on GB News, which is a controlled opposition, but we won't go there, okay? He spent his entire time on GB News bashing NatWest Bank and telling everyone how horribly he's been treated and how unfairly he's been treated and how he didn't deserve to have his bank accounts froze and how they do this to people all the time. And this has been going on for a couple of weeks, but it has since come out that the hedge fund owner, that of course he's friends with because he's an ex-hedge fund guy, has taken out a massive short position against NatWest stock. Then they used the channel, the GB News, which again is controlled opposition, don't say I didn't warn you. They've used this channel to whip up outrage over the bank's handling of one of its presenters, i.e. Nigel here. The stock had 850 million shaved off of its market cap. And then the hedge fund, of course, who has a short position, meaning it's going to profit from downfall in the stock, gets to exit the trade and walk away with a big profit. Since the short has been covered, the new news of today, okay, is NatWest has reported a profit rise amid this fallout. So NatWest has reported a profit of £3.6 billion or $4.6 billion for the period compared to £2.6 billion the prior year and above the £3.3 billion average analyst forecast compiled by the bank. So one thing I think I should point out here is NatWest, okay, is about a third of it is owned by the UK government. So this is probably just some damage control that they're performing right now. Or maybe the hedge funds already knew that this was going to happen and therefore they thought they'd just short it down so that they could then cover their short and flip long from all the panic sellers that they've whipped up as a result of this man parading around on his controlled opposition news station. So this has got a lot of people wound up. I'm seeing a lot of people saying, this is disgusting, he's a criminal, this is insider trading. And yeah, I guess so, right? I'm not trying to defend him. But What I am trying to say is, as a trader, as somebody that understands how the game is played, okay, this is exactly how the game is played. Not only that, I've seen this exact template before. In fact, probably with an additional step that makes it worse than this, which I'll show you in just a moment. But I've seen this exact thing before from this exact person, okay? Where have I seen this before? And of course, the answer is Brexit. So this is exactly the same template. This is just how the game is played, right? During Brexit, in the run-up, there was a vote, okay? You could vote in the UK, of course, you could vote to leave the EU or you could vote to remain. And the YouGov, which is a government-sponsored polling company, right? They ran polls all over various social media sites and other places. And because they were doing this, they were able to figure out which way the vote was going to go, right? If you ask enough of the sample size, then you can have confidence that everyone keeps voting for leave. Everyone keeps voting for leave. So they already knew that we were going to leave because they had used this government polling system and polled a bunch of people over social media, right? Now, Nigel stood up moments before the decision was made on the mainstream media, and he made it sound like we were going to stay in, right? He gave this big speech about we're going to stay, everything's going to be great. And what this did was it pumped the price of the pound up. So whilst he stands on mainstream media and pumps the pound up, right, telling everyone and making it sound like we're going to stay in the EU, his hedge fund friends already knew which way the vote was going to go because they'd seen these polls from YouGov that everyone had been voting on social media, right? So they already know the vote was going to be for leave. And they stood Nigel at the front and got him to make it sound like we were staying, making his Remain speech, pumping the pound up, only for his hedge fund friends to go and short the top right after his speech. Then, of course, the vote comes out, and in line with YouGov, the vote was to leave the EU, meaning his friends at the hedge fund got to short the pound at the top, make a fortune, and this is how the game is played. Thank you for playing. So as you can see, it's the exact same template, just with this additional step where first they get some inside information by convincing a bunch of people on social media to vote one way or another on these seemingly benign polls. So you can see here the Brexit short, how hedge funds use private polls to make millions, right? I mean, the whole thing is a scam. The whole thing is a scam. And my point is not that I condone this behavior, of course. Of course, this is insider trading. This is corruption. This is a bunch of things that none of which are positive, right? I'm not in any way defending or advocating for this type of behavior. But what I am saying is I was not caught up in any of this. And the reason being is I do not give my energy to stuff like this, okay? I focus my energy on learning about how the finance really works. I focus my energy on learning how to exit the system. I focus my energy on learning how to build a portfolio of wealth that I can hold in my real hand, that is a real asset, a real bearer asset. And I don't waste my energy hating this guy that I've never met. And so my message is quite clear. Whilst this guy probably is a criminal, right? Whilst this guy probably is not a good guy, whilst he probably doesn't have the British people's best interests at heart, okay? Wasting your time hating on this guy is pointless. Instead, you should focus on learning how the template is used, learning how the game can be used in your favor. In fact, I can remember a time when I made a really nice trade shorting Tesco, and my entire thesis for shorting Tesco was it was on the morning news and they were talking about how the share price had done really well and their earnings kept exceeding expectations, right? And it's out of context, generally speaking, for the news to be talking about share prices. Generally speaking, the mainstream, like non-financial news doesn't talk about share prices that much. But I remember waking up one morning, I was having a coffee, and I don't watch the news anymore, but this was back when I was watching the news. And like I said, they put this big piece out about how Tesco's share price had been soaring and how earnings kept beating expectations and all of this. And I remember even back then, I was like, this has got to be a short opportunity. They're luring people in because they want them to buy shares in Tesco's. And I looked at the chart and the chart was up in a straight line. The chart looked something like this, right? Straight up like this for a long, long time. And we got into this neighborhood and then suddenly on the news, they were talking about how Tesco's share was doing really well and the share price had been performing and the revenue expectations were exceeding. And I remember I was thinking, there's no way this is going to break down. I drew a trend line. There was about 2 days of further upside. And then what we saw was a big technical breakdown. And I made a fortune short in Tesco stock, all because instead of reading and looking at the news as they intended me to do so, I immediately was like, nah, what's their angle here? What's their angle here? And so I made a fortune short in Tesco stock because it had been on the mainstream media. So if you can learn to think differently, if you can learn to understand that nobody out here is looking out for you, nobody has your best interest at heart, only you are capable of being self-sovereign. Only you are capable of learning how the game is played. If you can take that approach, then you can start to see things like this as comedy rather than have it steal your energy and you get angry at poor Nigel here, who really is not his fault, okay? A lot of you would probably do the exact same thing if you were in his position, okay? It's easy to say, oh, I would never have done that, but how many of you complied with the things that unfolded over the prior few years, okay? So anyway, that is enough of that. Speaking of corruption and all of this kind of stuff, I've been talking about this on and off since the FTX collapse, right? Sam Bankman-Fried will not face jail time for the billions of dollars illegally siphoned from customers and donated to politicians. I said this all along. There's no way he's going to face jail. I said he's going to get away scot-free. And the reason for that is simple. He is affiliated with everyone's favorite 3-letter organization, right? So again, we can choose to be upset by this. We can choose to let it take our energy, or we can just understand this is how the game is played and try to exit the system. Remember, Bitcoin is not just hope and freedom. It's not just a way to preserve your purchasing power. Bitcoin is the exit, okay? Bitcoin is the exit for this exact reason. It's the same with gold. It's the same with silver. You have a chance here to say, I don't want to be part of any of this. I don't want to be part of this guy's games, right? I don't want to be part of any of this stuff. I'm going to exit the system. I'm going to have bearer assets that I can hold and have no counterparty risk. So from my big speech about exiting the system, it's probably exactly what you needed on a Friday, right? JT here. I absolutely love this guy. He's very, very good at reading a chart. I recognize that instantly. And I noticed this as well. He's talking about the VIX here. And I liked to see, when I see high-level analysts like JT, for example, have the same kind of expectation as me, it gives me even more confidence that I'm probably right about what's going to happen. This is the VIX. JT is calling for more downside room here in the VIX, potentially as low as 8 to 10. Before then, we get this huge spike to new highs. So we should still have a blow-off top move left in the S&P 500. Like I said, probably got to be open seeing a weekly cycle low at some point, but a blow off top is coming. And then as we get the meltdown, the big deflationary bust that I've been talking about since around the summer of last year, we should get this enormous VIX spike, which will likely be one of the trades of the year. Whether it occurs at the end of this year or the early next year, I do think we're going to get this big VIX spike from 8 up to, I would think, at least new all-time highs. 90, 100, even as high as 120 is possibly on the cards here. So big VIX trade coming up. I'm going to keep mentioning this on and off, but like I say, we've probably got months ahead of us before we're actually going to be able to start to get long the VIX and capitalize on this massive opportunity. There's some interesting developments in the charts. So what I'm going to do is I'm going to breeze through a few of these now based on the updates we got yesterday. Tomorrow, I'm going fishing, so I'm going all day. So I'm going to put out a video I made on the property market. So I'd recommend going to watch that. Then I don't think I'm going to be putting out a video on Sunday. So instead, I'm going to do the normal weekends deep dive TA on the Monday morning. So ready for when the market's open, we should have a full deep dive TA video available for you. For now, the dollar has rallied right back into resistance. So again, it's the same rinse and repeat thing. If we can get rejection off of here, happy days. If we were to break out of this downward sloping blue resistance line, then that opens up a big risk off moment. Bitcoin is still doing a whole heap of nothing, but I would say we had breakdown retest looking for that resumption lower. So therefore, my target still remains this 60-day cycle low due at around the middle of August. And from there, we will look to get long and see what the market can give. It's the same for Ethereum. XRP still doing a whole heap of nothing. So we'll see what happens there. Gold, I was talking yesterday about getting this 2 drives undercut pattern, wasn't I? Something like this, where we come down, 2 drives, undercut that low, make a swing, and we mark that as the cycle low and get long here with a stop below. And that's exactly what seems to be in play right now, isn't it? So, oh, too far. So we've had our first drive, counter trend bounce, second drive, which is undercut that low. Now what we're looking for is a nice, big, strong green push. And then I can call that the cycle low with confidence. Probably going to add a long and move the stop up from the first position to below wherever the next swing forms, wherever the next cycle low forms. So that's probably a trade that's coming this week, next week, whatever you want to call it, this week coming. Same is true of silver, isn't it? So we've had our 2 drives, counter trend bounce, undercut the low. Now all we need to see is a push off, and I think we can move this stop up and add another position. Nothing to say that we couldn't move lower in the short term, and this is true of gold as well. So we've had the undercut. Are we going to just push down a little bit more and then reverse? Either way, I am looking for swings, and I believe swings are buyable dips in this scenario. We had some big red candles show up in the stocks, didn't we? So for now, it's hard to not be bullish on the S&P 500. Above this blue upward sloping support line, above this breakout level that confirmed the new daily cycle back here, we've got our stop moved up, but I'm not going to tolerate any closes below this blue trend line. So if we break down from here, I will be cutting the trade and locking in the profit from here to wherever we break down from. The Nasdaq right into blue support, still holding above the entry. As I said over and over and over again, I'm not going to allow this stop to get fully stopped out. If we start to close candles below this level here, then I'm going to cut this trade and just sit on the sides under the assumption that we have got more downside coming from the Nasdaq. The Dow Jones, quite a big red candle yesterday, but overall still breaking out some kind of back test more than reasonable before then we move higher. It's of note that if I grab this tool here and I measure from the cycle low, the S&P, out to here, we could well be leaving behind a mid-cycle low, a half-cycle low. So we could well see that this is just a half-cycle low shakeout. They do occur all the time. If you look between the cycles, there is often a half-cycle low shakeout. So maybe that tells us to be open to more upside and we can move this arrow higher up. All the while, like I said, we're above these upward sloping support lines. There's no reason to exit the trade. These blue arrows here denote weekly cycles. So this current one lines up quite nicely with a weekly cycle. It tells us to be open to a flush. Are we going to get that sooner rather than later? That is, of course, to be determined. So other than that, not a great deal going on. The closes will be really important. And I should have pointed this out, actually. If we have another big red candle across the board for the stock market, if we end up getting some kind of big move down, if the Nasdaq closes below this blue horizontal line, if the Dow ends up coming all the way back down here for some reason, then I think we could say with high probability that the top is in for this current cycle and we should be open to seeing the next 20 odd sessions in a decline into those cycle lows. But like I said, we'll also know, because if we close the week bullish this week, if this Dow ends up here, if the Nasdaq ends up holding support and up here, if the S&P 500 ends up somewhere in this neighborhood, then we could say with high confidence that the cycle low decline is probably not coming for a little while. So as ever, open to all outcomes. I'll examine the closes. I'll get that video out to you on Monday. Like I said, I've got a property market housing crash thing coming out tomorrow. So make sure you come and check that out. It's pretty interesting, the stuff I found. In the meantime, have a great weekend. All the best from me. Take care. Cheers. Bye.